Playing stock market defense, what professional traders are doing to protect their portfolios. In today's cover story, a look back at the financial collapse of 2008. Has enough been done to avoid a repeat? Plus, is it a bad sign for the stock when the retailer's already advertising for Christmas? And is Twitter secretly setting up for its IPO? First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. It's Friday the 13th. In today's first look, the market shows few signs of fear. Stock staged a mild sell-off Thursday after a long rally run. Gold buyers backed off their safe haven play by pushing gold futures down $41. Oil was the only sign of possible trouble with the Syria crisis as futures shot up $1.13 per barrel. Boeing is ready to stretch. The jet maker reportedly has scheduled the first flight for its Dreamliner 787-9 for next week. Walmart's wage war win. The mayor of Washington vetoed a bill that would have forced Walmart to pay employees a living wage of $12.50 per hour. The Democratic mayor called it a job killer. And Trader Joe's is reported to be cutting health care benefits for part-time workers, but will give them $500 to buy their own coverage on health exchanges. Lincoln Ellis of Strategic Financial Group joins us on this Friday the 13th. And Lincoln, is there any reason to fear the market, or should we be fearless?
Well, look, Friday the 13th, we're sitting right close to all-time highs across most of the major markets, and we've got a big Fed meeting next week. Maybe not fear, but caution might be the word of the week.
What about gold? It looks like money is coming out of gold rapidly.
Yeah, gold's been having a rough couple of days. Actually, the worst day yesterday in over 2 months. And so I would be careful. The technical ways in which that market trades can make it very treacherous for investors.
And retail, Tal, what do you expect we will hear from retailers, and what will it mean overall to the market today?
Yeah, I think people will be watching these retail sales numbers very, very closely. Back to school sales, a hugely important part of the consumers, of the retailers rather, total profits for the year. We'll also get a look at producer prices this morning and the further pieces of the inflation puzzle later Monday and Tuesday.
Anything in this market you would be buying?
Emerging markets have come back, retraced almost half of their losses for the year. We think that that's an interesting longer-term story, and broad-based exposure to the commodity complex, which has also spent the last 3 years getting the stuff beat out of it, looks interesting here.
Thank you, Lincoln, and have a great day.
You bet.
In our cover story, the three-ring circus of panic that brought the collapse of Lehman Brothers 5 years ago and a $700 billion bailout known as TARP for Troubled Asset Relief Program led to change. But how much has been implemented, and is it enough to prevent a financial crisis from happening again? At a conference in Paris this week, banking interests assessed progress toward making credit default swaps more transparent.
For people who use these, they're going to get some pre-trade transparency. They can see prices, figure out if they're getting a good deal, and if they got a good deal afterwards. On top of that, we're building trade repositories to store this data so that we can see what sort of risks are contained in the system.
Analysts say credit default swaps provided a form of insurance on risky mortgages and encouraged lending to borrowers with poor credit before the housing bubble burst. Then in 2008, the phrase too big to fail became synonymous with an economy held hostage. It led to Wall Street reforms under the Dodd-Frank Act, restricting banks from overextending themselves.
The banking industry is far more capitalized, well capitalized, than they've really ever been before. And that's both with regard to the amount of capital that the industry has, as well as what you might call the quality of capital.
But others warn that Dodd-Frank's intent is being picked apart in the rule-writing process, that regulators are too closely tied to the banking industry to support tough legislation, and that government policies encouraging home ownership have not changed.
Yes, banks have gotten more risk averse. It's harder to get a loan now than it was in 2007. And I think it's probably a good thing. I mean, you want to be able to pay back a loan if you're going to take one out. So there's nothing wrong with that. But because of the fact that the government is still in the business of manipulating and subsidizing the housing market, I think the kind of root cause of the crisis of 2008 could bite us again 5 years from now.
Though Dodd-Frank reform was approved 3 years ago, a lot of the details remain unspecified. As of this month, 40% of Dodd-Frank rule-making deadlines have been met. 61% of the deadlines for reform have been missed, and about 32% of rulemaking requirements have not yet even been proposed.
An upcoming recess is canceled for Congress. House Majority Leader Eric Cantor says instead of taking a break starting September 23rd, lawmakers will work on a short-term spending bill that avoids a government shutdown ahead of the September 30th deadline. Thursday, the GOP discussed delaying Obamacare for a year by attaching the plan to a government funding measure. The president has said he wants a budget proposal with no strings attached. The Department of Health and Human Services reports health care reform saved consumers $1.2 billion in premiums last year.
Russian President Vladimir Putin took to the New York Times to plead his case on Syria. In an op-ed piece, he argued against military intervention and chided the U.S. for a go-it-alone mentality. Meanwhile, Secretary of State John Kerry continues diplomatic talks with Russian Foreign Minister Sergei Lavrov and will continue at least through today and possibly tomorrow. President Obama has expressed optimism that those talks could yield concrete results.
The SEC wants a list of concrete measures to improve technical systems at trading exchanges. Leaders of the NASDAQ and NYSE were called in yesterday for a meeting in response to the 3-hour-long trading halt August 22nd at the NASDAQ. Exchange officials blamed a technical glitch. One of the possibilities to ward off hack attacks is a kill switch. Mary Jo White, who chairs the SEC, stressed the need to strengthen critical market infrastructure when technology falls short.
Twitter is officially in the process of filing for an IPO, and the founder of Facebook has a message for the social media company that his IPO experience was not that bad. Despite the snafu on the NASDAQ in Facebook's opening day, Facebook founder Mark Zuckerberg said at this week's TechCrunch conference, going public made the company stronger. Facebook stock has been climbing for several months. It closed yesterday just slightly below its 52-week high. Meanwhile, Twitter tweeted yesterday that it has confidentially filed for an initial public offering.
The world's largest hotel chain is prepping to move into the IPO market. Hilton filed for a public offering this week and is looking to raise $1.2 billion. Timing could be everything. Hotel and lodging stocks are at the best levels in 6 years. Hilton is owned by Blackstone, which plans to use the money raised in the IPO to pay down debt.
Shareholders are sticking with Michael Dell. The majority of investors voted yesterday to approve selling the computer company to its founder for $24.9 billion. Stockholders will receive $13.75 a share in cash plus a 13-cent dividend. Michael Dell wants to take the company private and fought off activist investor Carl Icahn, who believes Dell is better as a public company. Michael Dell said in a statement, "I am pleased with this outcome."
Billionaire investor Carl Icahn is taking a bigger bite out of Apple. Icahn tells CNBC buying more Apple shares is a no-brainer. He says the stock is extremely cheap with a market cap around $300 billion and could generate returns near 18%. Apple shares traded last at $472. This week, the tech giant took the wraps off 2 new iPhones. Walmart will sell the iPhone 5S for $189 and the 5C for $79. Both are slightly less than the retail price.
A U.S. bankruptcy judge indicates that he is warming to AMR's plan on how to exit bankruptcy. This comes at a time when the mega merger between American Airlines and U.S. Airways is being scrutinized by the Department of Justice's antitrust regulator. At a bankruptcy court in Manhattan, Judge Sean Lane said that he's inclined to support AMR's plan despite those merger concerns.
GM is rolling out new SUVs to positive reviews. The new larger and redesigned 2015 models include the Tahoe and Suburban, along with the pricier Yukon, Yukon XL, and Yukon Denali models. GM says the new models are more fuel efficient and have a softer, more refined look. SUVs are a major moneymaker for GM. Sales are already up 22% this year. Dave Thomas of Cars.com says the new models will also add to the automaker's profits.
No matter what people think of the looks, these are really important models to GM. They're one of the few players in full-size SUVs, so they need this update. The improved mileage will help, and obviously the new looks will definitely help.
The SUVs go on sale in the first quarter of 2014. Thomas suspects prices will be in line with current models, which start around $40,000.
An out-of-control fire has destroyed a section of the New Jersey boardwalk. The 6-alarm blaze spread rapidly Thursday, burning the boardwalk and taking down several businesses. USA Today reports that the fire started at a New Jersey frozen custard shop in Seaside Park. Wild flames pushed by strong winds also reached what was left of the Funtown Pier, where a roller coaster was whipped into the ocean during Superstorm Sandy.
2 million dehumidifiers are being recalled due to fire hazards. The dehumidifiers made by Gree Electronics can overheat, smoke, and catch fire. 46 fires have been reported, but no injuries. More information is available at the Consumer Product Safety website.
Investors are worried about a pair of retailers. Shares of Lululemon sold off more than 5% after the upscale exercise clothing company lowered its revenue outlook for the year. Investors are also concerned about the company's ongoing search for a CEO. Last May, the company, known by its ticker Lulu, recalled unintentional see-through yoga pants. And it's not going well for the Men's Warehouse. After firing George Zimmer, its famous spokesman, profits dropped 28% in the second quarter. The CEO, Doug Eward, blamed the dip in what he called macro issues in apparel retailing. The stock dropped 12% Thursday.
If you're thinking about going back to college to sharpen your skills or to get a different degree, Claire Levinson, author of Frugal Isn't Cheap, suggests you keep your day job.
I encourage working adults to talk to their employer and find out if their employer offers the tuition reimbursement program. Many of them do. In addition, look online, seek out scholarship options. There are many of them out there, and be sure to fill out that federal application for student aid to see if you qualify for any of those federal programs as well.
Affordability and convenience are the biggest obstacles in heading back to school. Levinson adds that older adults face different financial challenges than younger students as families, jobs, and general life get in the way. But she warns, never give up the dream.
The Financial Industry Regulatory Authority, better known as FINRA, is out with its list of the top 5 scams to avoid, starting with overseas emails promising money, followed by so-called free lunches with a product pitch, fake lottery winnings, penny stocks, and cold calls. According to FINRA, 8 in 10 Americans have received a potentially fraudulent offer.
Here's the economic calendar for today. It's retail sales for August, PPI, Michigan sentiment, and business inventory. Still to come, do desperate times call for desperate measures? In today's Traders Unplugged, the retailer that's all ready for Christmas. Plus, the financial values young adults could learn or unlearn by moving back in with their parents. And stick around to find out which universities have the best payoffs for students. Join us after the break.
This should give parents pause. Last year, nearly 22 million young people in their 20s moved back in with their parents. Now, that was a record. Of course, it's the recession. It's also because the economy is going through a transition from manufacturing to IT. This now creates a new dynamic, new rules for parents and their adult live-in children. Stephen Esposito is a financial advisor, also a senior vice president at Morgan Stanley. You just told me that you have people walk into your office who are senior citizens with their middle-aged kids also moving back in.
Absolutely. It's dramatically changing the face of retirement planning, because what happens now, you have to add a new dynamic to a retirement plan when somebody's looking for income, where now suddenly a retiree is finding out that they need to take a portion of their income and move it towards a 45 or 50-year-old child.
Boy, that's a hardship. What about the parents, though, who are already middle-aged and have the college millennium kids moving back in? What kind of planning advice do you give them?
Well, we make sure that they do not hurt themselves financially when they do that. I mean, 26%, the statistics show 26% of parents are actually taking on debt to accept that child. And that's not a good idea when you're in your 40s or 50s or even obviously a lot older. It's not something you want to do. So you don't want to hurt your financial situation in order to take care of them. You also want to set some ground rules with the kids when they come in to make sure that they understand this is a temporary situation. We have an exit strategy, and we're going to help you and teach you how to get where you want to go, because you don't want them to think this is the time where I can simply freeload off mom and dad and take it easy and sit back. They need to maintain the discipline and a mutual respect within the household.
Do parents know what to do to encourage them to start thinking about living on their own, how to save better maybe?
Well, you know, they've got some tenure, so to speak, so it's important that parents teach the kids what they learned as young people growing up. It always hasn't been easy for everybody as a young person growing up, so they need to pass on that wisdom to their kids and sit down and develop a plan. sit down and say, listen, here's where we want to be in a year, 2 years. Here's your goal. You may want to help them pay off their student loans, meaning as they work to save, they can't be using that money to spend on a good time. They need to be responsible and pay down student loans or save for a home or really get a plan where they can monitor each month, how are we progressing, where are we going, and are we achieving our financial goals? So really mentor them in many ways.
Steven Esposito from Morgan Stanley. Thanks so much.
Thank you.
Bill, on the opposite side of the coin, some young people are starting careers with super salaries because of the schools they attended. According to CNN Money, the United States Naval Academy tops the list, with grads earning $77,000 on average right out of school. Harvey Mudd College makes the grade at $73,000, followed by California Institute of Technology at $68,000. MIT, Stanford, Princeton, and Harvard are also on the list. Coming up next, is older and wiser better? Traders reveal their strategies in stodgy stocks this week in Traders Unplugged. And later on, options for protecting your portfolio in Chart Talk. We'll be right back. First Business is ready to unleash Traders Unplugged this morning. From the Flores CME Group, Alan Neckman and James O'Malley are standing by. Topic number one, guys, what's the answer to this one? Old timers, IBM and Time Warner are moving their retirees into the new healthcare exchanges. Are these mature stocks a buy?
Well, you're asking me to pick the best dinosaur. Looking at IBM, that's more of an investment. Time Warner has doubled from 60 to 120. Now it's pulled back a little bit. We're sitting around 110. My target on that's 134, so I still have some more upside in Time Warner, but I like the healthcare stocks actually better. They've got huge momentum. If you look at Cigna or WellPoint or Aetna, they've gone straight up.
Right, I actually completely agree with Alan here. IBM is facing some challenges, some fundamental changes in their business. I like the space that Time Warner is in a lot. Stocks like Time Warner, Comcast, they've all done well this year, gotten a little bit of a pullback here, and look relatively cheap here. I would like to play Time Warner to the long side.
Topic number two, oranges are extremely expensive in Jakarta, and that's because of the lack of infrastructure. So the oranges have to come all the way from China. We're talking here about underdevelopment. Which emerging markets would you buy?
Right, well, I don't trade orange juice, but I do trade the EEM, which is the Emerging Markets ETF. Now, this one we got a huge discount, and now they've kind of flipped the script. Institutional order flow has been incredibly bullish over the past couple of weeks here. We've seen a huge lot of 140,000 Ds 38 calls bought, so they're applying some serious strength and potential upside in the EEM.
Are you a buyer?
I am a buyer of the EEM.
There's a real strong support base at this low at 36. It's a 5-year low support. So they got overdone on the upside. These emerging markets got beat down when people wanted to exit, but I think it's a good value here, and we could see a nice little kick from these levels, a 20% move up to 44 in the EEM, I think.
Topic number three, Christmas ads already. Kmart is advertising for that holly jolly time. Is this an act of desperation?
Yeah, it's a little bit premature, but Sears has to do something. There's Sears number one. This stock, for whatever reason, has bounced 45% in the last couple weeks. I am not a believer in this stock move.
I don't necessarily believe in the move, but I do believe that
you gotta
I can
buy or
play
sell
with that momentum to the upside and make some money here. I would not like Sears as a long-term investment, but as a momentum trader, there is an opportunity for me to make some more money as we continue
The stock
higher.
in this space I like better is JCPenney from a limited risk standpoint. You know, we've got these real extreme lows at 12. We're holding around 14, and there's serious money in that space. So both of those stocks are dogs, but I guess people have to shop somewhere in some parts of the country.
Here is your bonus round question. Hey, big trender. Which stocks have soared to record highs this week? Facebook, Netflix, Walgreens, Starbucks, United Technology, or MasterCard?
I'm going to sit this out because I won last week. Why don't you answer?
Facebook, Netflix, the answer is probably all the above.
all of them. It's all of them.
It's all above.
But I won last week. I won like 2 weeks in a row.
There you go. Double win. Thanks, guys. First Business continues right after this. Joining us now for Chart Talk is Tim Bigham, a trading block. He's on the defense for us this morning. Good morning, Tim.
Good morning, Angie.
So for people who want to protect their portfolios, what is the best defensive play in the market?
Yeah. Looking at, the VIX or the VXX, which you can buy outright like a stock, trading really at all-time lows here. It's a way to kind of have some downside protection as the market sells off. VXX tends to go higher, so adding a little of that in here I think was not a bad play given stocks are within shouting distance of those all-time highs, and the concerns that we've seen in the past are still out there.
Are there defensive stocks as well?
Yeah, absolutely. I think the utility sector certainly is a classic defensive play, and given the bump up we've seen in rates, these utility stocks have been hit pretty hard here. So looking at names like American Electric Power, Duke Energy, yielding somewhere 4.5%. So given the fact that they are actually down this year across the board, I think those are names I'd look at as well.
Thank you, Tim.
You bet, Angie.
Well, it's time for us to close up shop for now. Coming up next week, how to handle inheritance money. Financial tips meant to save you from blowing through a wad of hard-earned cash. From all of us at First Business, thank you for watching and have a great weekend.